station of TFNN.
Sylvester Stallone knew his whole life what he wanted to do. For him, it was a chance to inspire others. Life wasn't easy. At birth, he was pulled out by forceps. It's why he looks and speaks the way he does. 1,500 agents said, no, you're not an actor. His first 3 scenes led to nothing, but he never gave up. Sly sold his first script, Paradise Alley, for $100. That money didn't last long. The last thing he had left was his dog. He got $25. That was rock bottom. He cried, and soon after, watched a fight between Muhammad Ali and Chuck Wepner. Wepner went 15 rounds but was pounded to a pulp. It inspired Sly, and he wrote for 20 hours straight the entire Rocky movie. Tried to sell it, but nobody wanted it. Too predictable, too sappy. Sly saved those comments and read them to himself the night he won the Oscar. Sly never gave up. One day, 2 guys offered to buy the script for $125,000. Sly said with one condition, I'm Rocky. No way. We need a star like Ryan O'Neal to play Rocky. Can you imagine? The same guys called him back and offered him $250,000 not to star in his own movie. Sly said no. They countered with $325,000. Sly said no. They compromised. $35,000, points in the movie, and Sly would play Rocky. Rocky has grossed over $225 million and the entire franchise over $1 billion. What's your Rocky moment, folks? What's your vision? Your unstoppable success? You were born to be a money master. The time is now to take massive action.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me.
Wow. Thank you very, very much.
The Trader's Edge with your host, Steve Rhodes.
Good morning from TFNN. Welcome to the May 27th terrific Tuesday edition of today's Opening Bell on the Trader's Edge. I'm your host, Steve Rhodes, author of Mastering Probability, the daily newsletter service that is the intelligence for creating financial freedom. Hope everyone out there had a great Memorial Day celebration, and the barbecue season has officially kicked off. And in a few moments, we'll go see what's grilling this morning as we take a look at the markets. But first, my outcome for the next hour or so, well, it's to teach you how to master the tools for trading. And that includes the tools of the mind, because when you and I, when we can master the tools of our mind, well, we begin to think like a strategist. So during the next hour or so, you'll hear me use terms like A to B equals CD and swing points, Gartley patterns, various candlestick signals that the sign makers of the markets, the bulls and the bears, create for you and I each and every day. Well, they do it really on every time frame, if you take a look at your charts out there. Now, these signals, these patterns are in a category of what I call tactical tools, and knowing how to identify these technical signals is really important. But you see, the real key to trading and investing, the real key to get your money to work harder for you than you do for it, is to have a strategy. And that's what I call mastering probability, because using tactics without strategy is a recipe for failure. And failure, folks, it's not an option in our playbook, and that is especially important. It's especially important when you're trading and investing. And you know what's even more important? It's not to confuse the terms of failure and losing money as the same thing. You see, in trading and investing, our spoilage, yours and mine, is money. Much like the leftovers from yesterday, from the Memorial Day's meal out there. No doubt there were some things thrown out or leftovers that will make its or made its way into the fridge only to see the trash can on the next trash day. But most of us don't really correlate that kind of waste to throwing away money. Well, it really is one and the same. And in trading, as long as you use stops, as long as you have a strategy, then the loss of money is nothing more than spoilage. So today and every day, let's do what we can to think like a strategist, because strategists, they slay that tactician all day long. So let's begin our day by getting into a peak physical state, get those shoulders back, taking a nice big deep breath of air out there, and eventually go ahead and blow it out. Let's start off by getting that peak state so we've got a nice, strong mind. Let's take a look at one of our tools, a tool I call the journey of 1,000 miles begins with one step. That's an ancient Chinese philosophy, and I think it's one that each of us should use. You know, perhaps one of the most important and meaningful journeys that we make is the finding our place. You know, it's really in the finding of our place in this world. So the key to that journey is taking steps. And if you have a great ambition, well, then you got to take as big a step as you possibly can in the direction of fulfilling your ambition. And if your step is but a tiny one, I say don't fret, because perhaps it's the largest one that you can take right now. And should you ever take that tiny step, always remember that at some point in time, you're going to have to take a really big step, what I call taking massive action. Now, on a visit to Sir Jacob Epstein's studio, George Bernard Shaw, co-founder of the London School of Economics, he noticed a huge block of stone standing in the corner. And he asked, "What's that for, Epstein?" Why, Epstein, the sculptor, said, "I don't know yet. I'm still making plans." Shaw's reply was, "You mean you make plans for your work?" Shaw, the playwright, said, "I change my mind several times a day." And of course, Epstein, he replied like this. He said, "Hey, that may work well with a manuscript, but not with a 4-ton block of stone." You see, planning was a first step for Epstein. That was his art, and he needed to plan for it. So the question this morning is, do you have a 4-ton brick in your life that you need to start making a plan for? Well, it's really key. Just begin by taking that first step, small or large, because the journey of 1,000 miles begins with that first step. It is Terrific Tuesday. This is TFNN. I'm Steve Rhodes, and welcome to the show. Let's go see what's going on in these markets here. Dow futures up 67 points right now. They're trading out at 16,653. S&P futures up 7 points, trading out at 1904. NASDAQ futures up 17, trading out at 36.92. King dollar back about 7 pennies right now, trading out at 80.38. Goldilocks on fire this morning. It's down $14. It's off of its session low. It's trading out at 12.77. Silver off of its session low. It's trading out at 19.14. Light sweet crude back 23 cents, trading out at 104.12. Our call-in number is 877-927-6648. Would love to hear from you. Give me a call if you'd like me to take a look at your stock chart. A quick peek across the globe out here. FTSE up 31 points. That's up about 0.5%. DAX up 0.4%, up 36 points. The Nikkei finished up 34. Hang Seng off 19. The Shanghai down 7. Let's go start by taking a look at what's on the grill this morning. And on the grill this morning, it is silver. Let's go take a look at Hi-Ho Silver, see what it is doing. Traded out at 19.14. Now, as we know, silver and gold really have been trading in a very narrow consolidation-ish type range. In the case of silver, it potentially, if it can break through the lows here of December 31st, I'm not saying it's going to do that because it formed a real nice pattern here this morning. So we're going to go take a look at that. But if it does, if this pattern that we're going to take a look at fails, silver should go down and test 1872. If it can break through that level, December 31st, it gets all the way back to the June 28th lows and beyond that area. But let's take a look at what silver has actually done here today. And where we're going to start with, if you're watching us on TigerTV, thanks so much for doing that. If you're listening on your radio or your mobile device at TFNN.mobi, we absolutely appreciate that. I'm going to describe exactly what it is we're looking at and the pattern that's set up here in silver this morning. Really, two patterns. One we're going to use as our anchor, as our swing point. We're going to use the low here from May Day, May 1st. That low is $18.68. That's going to be our low. Now, the high since that time period actually came in on May 14th. May 14th side, $20, and what $20 we'll call $20 even Steven. Now, that's going to be the A point of an A to B equals C to the downside. So that's going to be our A point. Our B point is going to be the low that took place here on May 20th. That's out at $19.22. Makes a retracement up to a high out here on May 22nd. Gets up to $19.82. What silver did here this morning, it got down to a low of $19.04, 19.035. We'll call it $19.04 because last time I checked, I can't find a half a penny out there. Not that I wouldn't take them. And if we take a look at what gold did here, it made 1-to-1 A to B equals CD was at 1904. 19.048, so 19.05. So we've got an A to B equals CD to the downside. What we also have is a retracement from our swing point low. That's the low on May 1st, all the way up to the high that was put in here on May the 14th, the 0.618 retracement number. I'm sorry, I take that back. It's the 0.786 retracement number that we're watching. That's at about $18. Let me blow this up so I can see. $18.97 out there. So did silver get to $18.97? No. Does it have to? No. This is like, what's that guy's name in Pirates of the Caribbean? Jack Sparrow. I don't know if it was Jack or was if it was one of the other guys there. These are guidelines, folks. You don't need to. These numbers don't have to be hit exactly. And if we take a look at the pattern out here, this will go ahead. We'll draw it in here just so you can visually see it. That says that you've got a 0.786 Gartley buy pattern. And what it was also doing, in essence, was making a 1.272 expansion. That's a Fibonacci number. That's an expansion of its B to C swing point out there as it got down to that $19 and about 3 pennies out there. So you've got a nice little Gartley buy. Is there any kind of confirmation on it? No. Does it mean that this pattern here holds? No. But if you want to know what was silver doing as it made its way down to the 1904 level, there is your pattern that was in play. We'll see if silver can hold these levels and if it can bounce. And, of course, it's going to need its friend Goldilocks out there. So let's go check in on Goldilocks. Let's go see what she and the 3 little bears are doing here, because the bears, they're trying to push gold down through its swing point out here. And this is where we really find out what's going on inside of the metals market out here. That's as gold attacks that B point of a larger A to B equals CD to the downside. You see that 0.786 Gartley buy pattern that we were taking a look at in silver. We don't have that same kind of pattern here inside of gold. At least I don't believe we do. Let me just try to draw this one in. This would be the one that would take. Now we don't. We do not have that pattern in play here. But what we do have inside of gold is it has been trying to punch through and punch through and punch through the 1277.40 level. That's the April 1st low out there. That has not been able. Now it's been able to spike through there, but has not been able to close below 1277.40. That is the number to be watching. Right now, you've got gold trading out at 1276.90. A close below 1277.40. That's right. It's just trading slightly below it right now. So we've seen that punch, but a close below it probably sends gold down to about 1185, 1216. Certainly, it should then go back and test the December 31st low out there. And that's at a price point of 1181. So 1181, 1185-ish. That's if in fact gold. I don't know. That was not very good grammar out there. But it is what it is. I can't take it back on live radio. So watch that 1277.40. It has been held up as support by the bulls out here for quite some time, because silver or gold tried to bust through there on April 22nd. It tried to bust through it on April 24th, on May 2nd, on May Day, on May 12th out there. Hasn't been able to do it. That is a strong, defensible line for Goldilocks. Dow futures are up about 72 points right now. S&P up 8. Stevie Son and TFNN will be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
It absolutely is, folks. Welcome back. Hope everybody out there had a great Memorial Day weekend and all the festivities. If you had to work, then hopefully you had a great weekend out there. But it is good to be back with you. Let's go check out the futures markets. Let's get a feel for what's going on out here as we speak right now. Now you got Dow futures up 77 points out here. Let's take a look at a couple of different charting tools. Where do we want to start? Let's go start taking a look at the Stevie, the Rhodes Momentum Indicator out here. Let's take a look at what's going on a couple different time frames. So we're going to take a look at the Dow futures first. I've got the weekly chart up on my screen, so let's go take a look at that. The Dow right now is the Dow is the weakest. You've got the Dow, you've got the Russell 2000, I suppose, as the weak links out here. Now, the Russell 2000, you got to watch out for that because that is going to catch on fire. We've already got you'll see as we take a look at the NASDAQ. So let's take a look at the Dow. Let's kind of really put this in perspective because when I say it's the weakest out there, what the heck does that really mean? If we take a look at it, if you watch this on TigerTV on the weekly chart, you are seeing at number one here. Let me blow this up just a little bit more. The week that's really a focus is April the 4th. April the 4th, the high inside of the Dow futures here. That's what we're taking a look at. The high was 16,574. You're trading at 16,586 right now. So we're up and above the high of that session, just slightly. That was a shooting star. Close today above that level would be very bullish. That's an area, that's a shooting star. It's the opposite of a hammer candle. That's really a resistance line. Now, what we're seeing here is we are seeing the Dow make a higher high with less relative strength. Now, that can resolve itself with a continued push higher out there. So we don't have any kind of reversal signal other than that shooting star. Last week was not a reversal signal at all. It was really no candle of significance. And so it's that shooting star. It's that high from April the 4th. And this week, very important, if in fact the Dow is able to close above, again, to give you that number, 16,574, that's using the futures out there, be very, very bullish. That's what's going on the weekly chart. If I take a look at a daily chart out here right now, the daily chart shows the high of May the 14th as a bullish engulfing. That bullish engulfing session did have follow-through on that very next session on May 15th. That says that the high on a daily chart that the Dow needs to get above is the high of 16,694. So it's not up there right now. That's another, 30 points or so, 31 points or so higher. A close above that on a daily chart today would say, okay, this thing has got some real legs, some real juice inside of it. And, of course, if we take a look at what, let me pull up the daily charts out here, use, a couple different systems. I've got really 3 charting tools that I use out here. If we take a look at the Dow, here on a daily basis, it's so easy to have drawn in here. The Dow's got a 600-point consolidation that it has broken back out of again. It broke back out of it on Thursday. Friday had some follow-through action, obviously, over the futures opened up on Sunday evening, and electronically I've been trading out here. So what we've got going on out here is a 600-point consolidation move that could easily take the Dow futures up into the 17,100. Does it have to do it right now, right here, right now? No. On a pullback, I think it's relatively important to watch that 16,500-ish level. That really is, in essence, the top of the consolidation box out there. We'll see if this time, if there is a pullback, if it's just simply a little trampoline, it's a test and a go out there. And that's what's going on inside the Dow futures. If we take a look at the NASDAQ, here's the continuous contract that we're looking at out here. And what is interesting about the NASDAQ, what was the weak link out there, it's not weak at all. What it has done, though, if we take a look at it, if you take a look at the NASDAQ futures, the low that was put in was April the 15th. And if we take a look at that low, let's take a look at the A to B equals CD. If we take a look at that low, which is priced out at 34.0475, all the way up to the key reversal high swing point, the B point out here, which was April the 24th. And that was out at 36.18 and a quarter. Makes a retracement, pretty decent retracement here over a couple-day period of time, getting down to April 28th. You'll see that the price projection of a 1-to-1 A to B equals CD takes the NASDAQ up to 36.94.04. Straight at 36.93 right now. And it's been up, howdy, like that. The actual intra-session high, 36.96. We'll see if it can take that level out. Now, it is up above the 0.786 retracement, up above the world so high. Well, it's up above that level. What does that say? It says, hey, I see your 1-to-1 A to B equals CD, and I raise you to a 1 to 1.272. I want you to take me up to 37.52 and take out those highs, that key reversal session back on March the 6th out there. But intra-session here, we'll go take a look at a 120-minute chart when we get back. We may see a pullback. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht has just announced a live 90-minute webinar that he'll be hosting Saturday, June 7th from 9:30 till 11 a.m. Eastern Time, entitled Energy Opportunities During the Summer of 2014. With the frigid winter having depleted some key energy stockpiles, Russian political tensions high, and the storm season for the Gulf setting up to reverberate through energy markets worldwide, opportunities could present themselves over the summer months that could provide huge payoffs. When you sign up, you'll gain immediate access to a 7-page report Andy has put together as an introduction to what he'll be covering, so you can start preparing and get a feel for what Andy will be discussing live during the workshop on Saturday, June 7th. Andy will be advising his attendees of at least one trading recommendation in each area, including crude oil, natural gas, coal, and refining spreads and oil products. The best part is that this live 90-minute webinar is only $99. Don't wait, sign up today and reserve your spot while gaining instant access to Andy's 7-page report right now. For all the details, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
To the races. We got the Dow up 54 points, trading out of 16,660. S&P up 8, trading out of 1908 and change. Composite up 25 points, trading at 42.10. Russell up about 8 points, trading out at 11.34. Apple up $4, trading out at 6.18. 42. We're going to have to go take a look at Apple. Leading the charts, the upside here this morning, Hillshire Brands. I believe some type of a buyout offer was just came out here before the bell, not too much before the bell, about a 20% premium. It's trading up $7 and change. Google's up about $6 here. Apple again up about $4.50 to $5. Zillow up 2.5%, up $3 this morning. Tesla up $2 and change. Michael Kors up $1.83. To the downside, Netflix leading the charge here. The downside off $3 and change. Pharmacyclics. You try to say that. Off about $2.90. Pinnacle Foods down $2. Allegren down Allergan off $1.32. Durata Therapeutics, DRTX, off 8% this morning, trading out at $15.49, down $1.40. Again, our call number is 877-927-6648. As I said, on the 120-minute time frame chart out here, we may have the smellings of a bit of a reversal, meaning a bit of a retracement and a pullback out here. We'll see. And the price is making the NASDAQ here is really what we want to pay attention to, because the NASDAQ can go ahead and motor on higher, and it can lift all tides. So we don't have a price relative strength divergent pattern here just yet. It looks a little bit different, I think, in the let me go switch over. The ES Mini had not formed one earlier this morning around the 7:30-ish time frame out here. Let me take a look and see if it has. It still has not out there. It's still pretty nice and strong out here inside the ES Mini. Let me take a look at the Dow futures here. Now, where things are at is things are certainly in the overbought condition. So there we go. So the Dow here really showing a bit of signs here of a little bit of a rollover. But it really should be expected. It's got a price relative strength divergent pattern. This is the 120-minute time frame that we are looking at out here. A little dark cloud cover completing here at 8 o'clock this morning. So it looks like we're getting a little bit of follow through. So inside the Dow, as I said, that let's go put that back up on the screen here. Let me go put the Dow futures. Let's put up the daily chart. I think it was the 16,500-ish level that we want to pay attention to. Now, what I want to do is I'm going to switch over to the 120-minute time frame. A little bit easier for me to draw the retracement levels out here using a 120-minute time frame. We're going to do a couple of different things. We take a look at the Dow because we want to really understand what's going on in both the weak link out here as well as in strong hands. So for the Dow to pull back to 16,530, we're at 16,627. Might seem like, okay, everything was a false move to the upside. Got to put this in perspective, folks. All that would do is be a 0.382 retracement. In fact, for the Dow to pull all the way back to 16,446 out there, and people will think the sky is falling. That's really only its normal retracement. It's 0.68 retracement. I think that what we're going to see here is we're going to see we'll see the markets eventually. I believe they will eventually pull back, and they will set up a larger B to a C of an A to B equals CD to the upside. Now, today being Tuesday, seems like a Monday, but for today being the first trading day of the week out here, should be relatively light volume. So volume will give us a fairly decent signal here today. Why do I say that? Well, you still got a lot of folks, it was officially, I guess it was the unofficial kickoff of summertime, right, when you get Memorial Day out there. So, you got folks that are going to extend that weekend, and why not? I'd like to have extended my weekend. I always like to get a little bit more end in the week out there, but you simply can't do it. Couldn't do it out here. I guess I got an early start on Friday. In any event, that's what's going on inside the Dow. So pay attention to that 16,530-ish type level. We'll see if, in fact, that's the first area of retracement that we ought to see the Dow pull back to. If we take a look at what's going on inside of some of these stocks here that are moving this morning, let's go take a look at Apple. Let's take a look at some of our core stocks, get a feel for what is going on there. So Apple, we know Apple had broken through a resistance level. We've been talking about that. That was the swing point and the downdraft that took place back in December in 2012. That downdraft took place with about 19 million shares to the downside. The swing point high, the area where it broke down from, was the prior candle. That was a session of December 3rd, that high, 594.59. As soon as, in fact, Apple got above that, it came into that level with a nice wide-ranging bar and some accelerated volume. It did that on the trading session of April 28th out there. It had another high-volume, accelerated volume day, and that was with the gap up. I believe that was an earnings date or the day after earnings. That was on April 24th. That had even more volume. That had even a wider-ranging bar. Of course, if you don't fill in the gaps out there, you wouldn't know it was a wide-ranging bar. So Apple was just simply screaming that it wanted higher price. So the next level of resistance inside of Apple, where Apple is headed to, even though it is still in a overbought condition, it wants to get all the way back to the highs out here from October the 5th. Now, there's a nice gap out there. The low is the high of that candle is the devil, is it not? 666 by my records out there, and even Steven high out there. However, it is the low of that session that we really want to be focused in on, that 651.28. Volume out there, about 22 million shares. So volume-wise, not, I guess, was it 29 million shares. It's not a huge deal. That's not a huge deal for Apple to be able to deal with that level. But that is where I suspect we will see Apple head to. Now, you can see it's also traveling with inside a rising price channel out there. we'll see how long it takes for Apple to get up into that area. It is most certainly in a overbought condition. Let's check out some of these other stocks out here inside of the what I call kind of like some core stocks to focus and pay attention to. Let's take a look at J.P. Morgan out here this morning. It's trading out at 55.22 out here. Now, looks like J.P. Morgan is going to try to make a run for its resistance area. This had gapped down on the trading session of April the 11th. Let's use a black line across there. And it did it with some pretty decent volume, 47 million shares to the downside out here, the top of which is 56.05. It has traded up as high since that session. It's bounced and traded up as high as 56.35, but it continues to get repelled by that line, that area. So expect that J.P. Morgan ought to trade into the 56.05 to 56.37-ish type level out here. If we take a further look at this stock chart, it has not completed any real patterns to the downside out here, no Gartley buy type pattern. But if we do take a look at retracements off of this swing point, let me do that. The swing point I'm referring to, this little candle session from June 24th, 2013, from that low to the high, about a 0.786 retracement out there. Still does not look really promising here for J.P. Morgan to the upside. It's got some pretty decent resistance overhead. We take a look at Google shares out here. The GOOG shares, they're trading out at 556.47. They ought to find some resistance in the level of about 562.19, 604-ish as the range out there. Let's take a look at Amazon, see what Amazon is doing out here. So let me refresh my screen, make sure I've got all kinds of current active data. There we go. So Amazon has got its own resistance level that it needs to deal with here this morning. That's up at the price point from April the 25th. The high is 316.49. No way that it's going to do it on volume, or certainly doesn't look like it, as Amazon had 16 million shares to the downside on Friday, moving up with about 3 million shares. So expect that to be a resistance area. That will either act as resistance, meaning 316.49, or it could be the low of the session where it fell off the planet of the apes out there, and that's the low of 322.95. So that's where Amazon is headed to and ought to find some resistance. I do believe Amazon over the course, let me put this on a weekly chart. Here's where I believe Amazon wants to move to. Here's where Amazon may present a nice buying opportunity. That's right around the 269-ish type of level. It is a nice rising trend line. It takes you all the way back on a weekly chart to the lows in 2008. November 21st, 2008, that low's at 34.68, and that has continued to act as a nice support line on any significant declines with inside of Amazon. The 105.80 level from July 23rd, 2010. That is your next touch point. You've got December 2011 at 166.97. Several weeks later, back in February, out at about 172. So a nice little rising trend line that is out there, knowing that Amazon on the daily charts has got that significant resistance. I say move down into that trend becomes a nice potential, I do say potential, buy pattern. Of course, if it breaks that trend, that would not be good news for Amazon out there. Let's take a look at Visa, see what Visa is doing here today. Looks like it's trading out at about, come on, refresh for me, would you? Right around the 213-ish type level out here. Yeah, so I've got this. What Visa wants to do, wants to make its next run up to the, we'll see if it can do it. It's got a nice little Gartley sell pattern at about 219.72. That's the yellow colored pattern that is on my screen out here. So this had made a nice little Gartley buy, 0.618 Gartley buy, as it made a low back here on April the 11th. Now what it'd like to do, it would like to get up and get to the 219 area. That's another $6 higher. When it gets up there, it's going to find some significant resistance out here. It should find significant resistance. If you go take a look at the first time we saw any kind of real volume out of this, there was on this trading session here from March the 21st was a little bit of a spike higher, well, quite a bit of a spike higher. Got up, wasn't an all-time high or anything, but it did spike up to 232.67. Traded as low as 219 that day, so pretty good price movement out there. Volume-wise, 9.5 million shares. So at that low of 219.70 and at 219.72, you've got a nice 1.618 expansion of your B2C swing point out there. That would set up a nice potential resistance area. If, in fact, that holds, that would be a decent short inside of Visa here, as it's got some high volume lows that it wants to test out. At least wants to get back down to that April 11th area, 2014 at some point in time. That's what's going on inside of Visa. Let's take a look at Priceline here. Priceline having broken through its descending price trend line out here. That's off of the highs from March the 6th. It broke through that trend line on May 21st. It certainly has not done that with volume. Now let's take a look at some horizontal resistance levels. Let's first take a look at retracements from high, all-time high, March the 6th out there at 1378.96, down to the low of May the 8th out at the 1087.26 level. We can see that Priceline is now above the 0.382 retracement level by gapping above it here this morning. That says that we ought to go ahead and see Priceline get into the 1267.53 area out there. Sorry for the phone in the background. I forgot to turn it off. In any event here, so 1267.53 is where Priceline ought to move to. Let's take a look at, not necessarily this morning, but that's where it wants to make a run. Let's take a look at Exxon Mobil. If we take a look at Exxon Mobil right now, it's trading out at 101.70 out there. Exxon has got a little bit of a downdraft that it's trying to deal with here, and that's from the trading session of May the 15th out there, 102.42. If you're inside the energy sector, the XLE, ExxonMobil is one that you're going to want to be paying attention to out here. So it's really been just kind of consolidating sideways. It did make a 1-to-1 A to B equals CD to the downside. It completed that on May the 15th out here. It does have one of these, these U of M patterns out here. These can be significant bottoming patterns out here. It's the same kind of pattern that we saw, say, U of M. You would like to think it would be the University of Michigan, but no, it can't be because the logo looks more like the University of Miami logo out here, and that is this U-shaped out here. And this is a type of bottom that we actually saw in 2009 inside the market. We've seen it a number of times on the way up off the 2009 lows, and each time they have marked some significant bottoms out there. But what we can also see inside of ExxonMobil here is a bit of a consolidation. Here's your little consolidation zone out here. So even if it can't get above resistance, it probably starts to stall in the 103.16-ish type area. Now, what ExxonMobil does have, if it can break through that consolidation, you'll see that at 105.12 is a nice 1.272 butterfly. Well, I don't know if that's the exact number now. I see this pattern here. It's a little bit off the mark. Let me at least draw in the right pattern out here. For goodness sakes, I ought to be able to do that. It's just a matter of connecting the dot. No. Yeah, it's going to have to just simply be close enough. 105.15 or so. I'll redraw it at some other time here because it didn't work that time either. And anyway, that's what's going on inside of ExxonMobil's world. Let's take a look at IBM. IBM right now trading out 185.39. Really not a lot of big movement inside of IBM to the upside as the market's been bouncing. IBM here acting like a little weakling. Now, that weakling here did go ahead and, off of its lows, completed in 1-to-1 A to B equals CD, which had a price projection of 198.97. Let me see here. Is IBM, is it on its way to trying to create a little Gartley buy pattern? Made a 1.272 expansion this morning as it got down to a low of 184.55. We get back from this break. Maybe I'll take a further look at IBM, giving an idea where maybe it is headed to. Dow's up 59, S&P's up about $8.75. We'll be right back.
Yeah, it's always better when we're together.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
It's always better when we're together. Yeah, we'll look at them stars when we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
Welcome back, folks. Did you check out that, did you watch that the Indy 500 out there? Man, what a great car race, at least the end of that car race. What a great race out there. Congratulations. What's the guy's name? Something Ray out there. My apology for not, Hunter Ray, I believe it is. Hunter Ray out there. And just simply a fantastic car race all the way to the end. Truly winning by a nose out there. All right, so let's go back and take a look at IBM. Let's go see what IBM has done here as of recent. Now, today it actually completed. Well, it did it a couple of days ago. Completed an A to B equals CD to the downside. So the 1-to-1 projection 184.68. It got down to 184.70. I would have to say that's completed an A to B, a 1-to-1 at least to the downside. That was on the trading session of May 20th. Now, intersession today, it's made a low of 184.55. out here. It also happens to be a 1.272 expansion of its B to C swing point, so it really qualifies as a Gartley buy pattern as we speak right now. Unfortunately, it doesn't really have a bullish reversal signal inside this, and that says, okay, it could move down to the next level. What's the next level? Next level is right around the 181.37-ish type range out here. Now, it may find some what's interesting here about the IBM chart is if you take a look at the trading session from March 21st, as it was trying to take out its B point of the A to B equals C to the upside, which was on March 7th. It had volume here on that trading session of March 21st, by the way, of 12 million shares. Now, that is considered a breakout there. And that breakout, what's interesting, if you go back to the prior candle, I always like to go back to the prior candle, at a minimum, the prior candle low, which that took place here on the trading session of March 20th out at 186.40. You know, that's really where it's trading into as we speak. On 184.17, I apologize. 184.17 is the low out here from March the 20th. So here's the Gartley buy pattern that has developed inside of IBM. That would be good news for the Dow out here. You can see the 1.27. Let me just change the color on that. So let me change that to a nice yellow. There you go, nice yellow pattern. Hey, somebody might say, hey, Stevie, it just did a 54% retracement. What's up with that? If you go take a look at H.M. Gartley's book, he wasn't using retracement levels like we do. We just simply notice the mere fact that as a price likes to go to those magnetic type levels out there. But what Gartley was talking about was just simply an A to B equals CD to the downside. If you wanted to get in on a trend direction, just wait for that type of move. Well, that's what we have seen here today. If this level fails, though, the 180-157-ish range is where it will be headed. But it is interesting to note what IBM is doing as we speak right now. And that pattern is not failing. Let's take a look at Intel out here. Intel right now having a nice move this morning. Let me make sure I've got all of the data out here. You know, you have a day where you close sometimes the system. So, boy, Intel trading at session highs up at 26.69. What Intel did was it came back to an area where it had broken out a little bit of a gap out there. It actually got below that level. So, really no longer should it be used as a support/resistance area. In fact, so much so I'm going to go ahead and get rid of it. But it does look like Intel trying to take on its highs one more time. In fact, it's trading into its swing point high from April 16th out there. So Intel ought to make a move up to 27.24. 59 million shares out there. Today it's on 4 million shares in the first half hour of trading. So, folks, it is a terrific Tuesday. If you're off to start your day, have a terrific day. As always, thanks for joining us here at TFNN. And I'll either see you in a few or I'll see you bright and early tomorrow morning. Have a great day, folks. Thanks again for joining us.
It's always better when we're together. Yeah, we'll look at them stars and we're together. Well, it's always better when we're together. Yeah, it's always better when we're together.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.